Hello, it's Robert Miner with Dynamic Traders Group with this week's YouTube update on several markets. What I typically do for our YouTube subscribers is I take one market and I go into a lot of detail about the technical position that it's in and potential immediate trade strategy. So I'm going to do something a little bit different today, and I am recording this a little earlier than I typically do. It's about 1 o'clock Eastern Standard Time on Friday. Usually I wait until after the close, or I do this on Saturday, but I'm taking off for the weekend. So I'm doing it now. So let's take a look at least 3 or 4 markets, because last week was, I believe, fairly significant in several of the markets, and they're offering some pretty good trade setups. Maybe not immediately, but in the days ahead. So this is, I think, what you're going to learn today is something that you can put into practice very quickly. And also, by the way, hope if you're not a subscriber to our YouTube channel, you'll do that. And you'll pass the word to other traders that you know that might find this kind of information valuable. Okay, let's take a look at the stock indexes. All the stock indexes are in substantially the same position. I'm just going to focus on the ES or the S&P to begin with. So this is the weekly data, and this is the weekly bar so far. We got about another 4 hours. Well, only about 3 hours of trading left in the trading day. So I doubt that it's going to be anything dramatically different. We've been down a fair amount this week. But here's what's important, what you really want to be aware of is, number one, this past week, as of this week, more than likely, we're going to close below the low of the prior week. We've already traded below it, so that's one signal that the market may be reversing to bearish. And if we end up closing below it, closing below 28.76.75 this Friday, that will be quite a bearish signal. It's still a bit bearish just because it traded below it, and we're going to close below the close of the prior week. But closing below the low is quite bearish for a weekly possible or probable weekly reversal. And the other thing that we did are going to do this week for sure is make what I call a dual time frame bearish reversal, and we haven't made one of those in many weeks, really for 2 or 3 months. So that's significant, and usually when we make a dual look back, I think I said dual time frame, I meant dual look back bear reversal, particularly when we have a exceptionally weak bar, is that indicates that we've made a reversal in this time period of bars. These are weekly bars, and would indicate that the indexes will be sideways to down at least for 3 or 4 weeks. So that's something significant that you can use, take advantage of that information. The other thing, this is our daily data, and we'll just go down to daily because it's fairly significant. This top that was made the prior week on August 29th just hit the 100% alternate price projection almost to the tick. It was within the 2-day time span of the 28th, 29th were 2 key time factors for at least a daily high to complete this advance off the August 15th low. And indeed, we made that was the high, and the next day we made a daily momentum dual look back bear reversal. But as of today, Friday, we've made a new low in the day, but what's significant is our DT oscillator, the dual look back momentum, daily momentum. Well, the 8, that's the shorter look back, has been oversold for 3 days, and the 13 fast line reached oversold today. So all of this will begin to be green beginning on Monday, because it'll be dual look back oversold. And that usually means we're within a couple of bars, 2 or 3 bars at the most, of making what we here we call a daily low. But because the weekly momentum is bearish, the higher time frame trend is probably bearish, and just in the initial stages of being bearish, any rally should be a correction within the bear trend. So we should soon begin an advance of 3 to 5 days. Keep in mind that'll be a corrective rally, probably not much on the upside. And then when we get the next momentum bear reversal, that'll be in sync with the weekly bearish momentum for probably even a stronger down move to begin probably be by later next week, maybe not until the following week, but just keep in mind that probably any advances that last more than 2 or 3 days, that's a corrective advance that'll terminate below the August high, followed by a continuation of the bear trend, more than likely. That's the technical position. So the reason I have a red line across this close on August 21st is if we make a daily close below 2861.75, we will have confirmed the continuation of the weekly bear trend. So that's a real significant price level. Okay, let's take a look at the. I'm going to take a look at gold next, because that's one of my favorite markets, and it's in a interesting position you might want to be aware of for early next week, actually. Well, this is a gold weekly chart, and when I talk about gold, silver and the GDX or XAU are in substantially the same position. Gold's been relatively stronger than either of those two, and gold's just a market I've traded on and off for over 30 years. So let's take a quick look at it. This is weekly gold. More than likely about 4 weeks ago, gold completed a 5-wave decline just above the December 2016 low. It was right in time and price targets to complete a 5-wave decline. And if that's the case, gold should be net bullish for several more weeks. Otherwise, we're just in the initial stages of probably what will result eventually in gold reaching at least the 50% retracement up at 1277. So the weekly momentums are bullish. They're not overbought yet, so that itself indicates a probable another 2 to 3 weeks net sideways to up. So here's where the position becomes really interesting, and we can formulate a specific trade strategy. Is that this initial advance off the August 16th low is probably an ABC, or excuse me, 1 through 5 impulsive advance, which indicates the higher time frame trend is bullish. I'm labeling this as a wave 1 or a high. Potential ABC decline, one of the textbook sort of corrective declines into last Tuesday's low, and last Tuesday's low was in the ideal position to complete an ABC correction, if indeed that's what was being made. Still got a question mark on it certainly until we close above the August 31st potential wave B high. That question mark will remain. But the low on Tuesday was just above the 50% retracement and just below the 100% alternate price projection of 100% of the range of wave A from the wave B high. So that's the textbook target for a wave C correction. And the day following on Wednesday, the daily momentums made a bull reversal. And as of today, at least so far, gold is in almost ideal position to complete a minor corrective decline. So here's our 240-minute data, and coming off of a little less data on here, coming off of that potential wave 2 or B low, which was, let me just label that, September 4th, we had what we can call on intraday data an impulsive advance and then a potential ABC correction. And the significant thing right now is, well, there's two significant things. One is the 240-minute momentum is oversold, and the low today is almost to the tick to the 78.6% retracement, which is typically the maximum retracement if indeed gold is making a minor correction off the high last on Thursday. Let's take a look at the 60-minute data. So here's a specific trade strategy for you. I don't know if it's completed a corrective low or not. What I do know is this minor corrective low is in what should be the maximum price target for this short-term minor corrective ABC. It's at the 78.6% retracement and the 100% alternate price projection of wave A from the wave B high. So if indeed the higher time frame trend is bullish, is gold really shouldn't trade below today's low that's been made so far, and certainly not below the September 4th low, which on the daily chart was labeled as a wave 2 or B. So the trade strategy is if gold were to trade above what I got labeled as a wave B high without having traded below the September 4th low. Well, that's the setup that a minor correction is complete and the bullish trend should continue, probably to fairly significant new highs. So if we want to take advantage of that information, is we can really bring our entry down to this little swing low that was made early this morning, 1207.80, to go long. And depending on what intraday little price swings we have here, the furthest the stop would be on the low that's so far today. That's been made so far today, which is 1198.70. So really fairly minimal capital exposure or risk for the potential of an advance to well above the August high. So a great trade setup. Now, I don't know if that setup's going to be made or not. I don't know if gold's going to make a new low below the September 4th low or not. But I do know, you always trade on what do you know. I know this is typically the maximum retracement for a correction and the ideal target for an ABC. I do know that if we go up and take out this swing high, typically that signals that the correction is complete. And so that's a significant piece of information. I do know that the weekly momentums are bullish. I do know that the daily momentums are bullish. So what a great setup to enter on a long trade if the setup is complete and the trade's executed with the trade above 1207.80. What would void that whole setup? Simply a trade below the September 4th low, because that would mean, number one, it's of course not a wave 2 or B corrective low. Something else is going on, and it would not be a typical ABC correction. And maybe I'm wrong about this being a corrective low and the higher time frame trend being bullish. So I would certainly revisit any sort of potential bullish trade strategy if we took out last Tuesday's low. And I suspect if we took out last Tuesday's low, we would see the daily momentums make a bear reversal anyway. So that's the trade strategy I'm looking for in gold. It's more immediate than in the stock indexes. This setup is probably going to either be made or not be made by this coming Monday. So it's some information you can use. And by the way, I won't bring up the euro. The euro's in substantially the same position, also with today at the extreme of what a typical corrective low is. So that's a couple markets I'm looking at over, I think, a couple of the best trade setups in the days ahead. The gold and the euro almost immediately for long as they don't take out this last swing low. That would void the whole go long strategy. The same with silver and GDX. Even though they made new lows the last week, they will tend to trend and reverse at the same time the more dominant market, gold, does. And you know what to be looking for in the days ahead for the S&P. Bonds, frankly, I'm not going to bring bonds up either because there's too much conflicting technical data, and I think that'll all get resolved here in a few days. But when there's conflicting bull and bear technical data, I just stand aside until it's in a more clearly defined position. Well, that's it for today. I hope you'll take a look at we have a lot more detail in our DT reports. You might be interested in a subscription to those. It's a pretty inexpensive subscription for you get two trade tutorials and 2 video updates every week, as long as the major reports that we do on Wednesday and Saturday, and those occasional updates when there's a brief updates. We email you whenever there's a change in the technical position or the trend position on any day. So that's it. Take care. Hope you have a fantastic week.